Hello, seafood friends! You're listening to Catch the Current, the coolest seafood podcast out there from the team at Undercurrent, bringing you everything from the boats to the boardrooms, breaking down the news, spilling a little industry fish oil, and sharing the sharp market insights you need to know. I'm Amanda Buckle.
And I'm Lauren Consiglione, and it's financial report time. Canadian processor High Liner Foods was in the headlines this week following the company's release of its second quarter financial results. Revenue rose 12.4% year on year to 269.3 million Canadian dollars, supported by higher volume and a broader product mix. The company sold a whopping 57 million pounds of seafood, up from 54.8 million pounds a year earlier. The North American seafood supplier increased its second quarter adjusted earnings by 20% as higher frozen seafood volumes and sales translated into stronger earnings, marking a significant improvement from the margin pressure seen in earlier 2026. But gross profit decreased in the second quarter by 3.2 million Canadian dollars, or 6%, to 50.1 million Canadian dollars. The company chalked the decrease in gross profit up to 10.1 million Canadian dollars in inventory-related losses associated with a fire at a third-party warehouse facility. The company did not specify the name of the third-party warehouse facility. High Liner said it expects to recover that through the recognition of insurance coverage by the end of 2026. If you want all the numbers from the financial results, we've got a link to the story from Undercurrent's EMEA editor Neil Ramsden in the show notes.
But I actually want to talk about some of the highlights from High Liner CEO Paul Jewer's Q2 earnings call. Jewer said on the call that raw material price inflation continues to challenge the company's operations. He described cod prices over the past 18 months as so significant as to cause spillover inflation to other whitefish species, such as haddock and pollock. Cod stocks, particularly in Norway, have been challenging for the company, he said. But haddock is an interesting story because he described the inflation there as essentially demand-driven. As cod prices climbed, customers started switching to haddock as a more affordable alternative, and that increased demand, which then pushed haddock prices higher.
And pollock is seeing something similar. Demand for pollock has remained strong because it's another affordable whitefish alternative to cod and haddock. So basically, when one species gets expensive, everyone moves down the whitefish ladder, and then the next species starts feeling the pressure too. And it's not just whitefish. Alaska's pink salmon season has been a major challenge this year, which is putting additional pressure on High Liner supply. Jewer said the company is expecting to see some inflation in pink salmon because of those weak catch rates in Alaska, but High Liner doesn't currently see any major long-term supply concerns for haddock, pollock, or Pacific salmon.
What it is concerned about is how unpredictable wild catch totals have become. Jewer said the inflation may keep moving around from species to species, but the company still expects to see inflation going forward. And High Liner is taking action now rather than waiting for prices to climb. During the second quarter, the company bought additional frozen inventory ahead of anticipated price increases in key species. CFO Kimberly Stevens said the company was doing some opportunistic buying, essentially securing volume while also getting ahead of expected inflation. And there is some good news on the cod front. High Liner is seeing an improving supply outlook in Newfoundland where quotas are increasing.
But the company is also looking beyond wild-caught cod. High Liner is increasingly turning to aquaculture as part of its long-term supply strategy. The company has invested heavily in Norwegian aquaculture. It put more than $11 million into cod farmer Norcod during 2024 and 25, and another $10 million into Norwegian Atlantic salmon farmer Andfjord. And in the second quarter of 2026, High Liner invested another $1.6 million into each company. Those investments have now given High Liner a 15.4% stake in Norcod and a 9.8% stake in Andfjord. Jewer says those investments are about getting exposure to growing farmed cod and salmon markets, but also about diversifying High Liner's supply chain.
High Liner's relationship with Norcod is already becoming part of its North American business. Jewer said the company is selling Norcod's farmed cod in the U.S., describing it as a premium product. Although this isn't going to solve the supply problem overnight, Jewer acknowledged that it will take time for both High Liner and Norcod to ramp up production. But another interesting takeaway from the call was consumer behavior related to inflation. Jewer said that despite price increases, volumes have held up better than expected. He noted that when prices rise because of scarcity, consumers have fewer opportunities to switch to competing products.
High Liner has used promotions to help consumers adjust to higher prices, though it reduced promotional activity after Lent ended on April 2nd. The strategy was particularly successful in the club channel, where some consumers continued purchasing Highliner products after promotions ended, but it's also expanding its value-oriented offerings. As UCN editorial director Cliff White reported this week, during the second quarter, Highliner launched private label products with national discount retailers covering value-added salmon, shrimp, and pollock, while also securing a permanent listing with a U.S. convenience store chain.
We've got links to UCN's Highliner coverage in the show notes. Now, enough of Highliner. It's not the Highliner show. Norway's Mowi has released its Q2 results. The world's largest salmon farmer by volume set new records in the second quarter of 2026, though adjustments and one-off costs saw its bottom line sink into the red. It achieved record high revenues of 1.6 billion euros and operational earnings before interest and taxes of 231 million euros. That's up 15% and 23% year on year, respectively. Mowi's CEO, Ivan Vindheim, said that farming operations continue to deliver very strong biological and operational results. In particular, the company's Norwegian and Scottish operations are performing strongly with record volumes and reduced costs, which Vindheim said is very encouraging. The link to the deep dive from UCN's Neil Ramsden can be found in the show notes.
Fellow Norwegian land-based salmon farmer Salmon Evolution has also released its Q2 financial results. The company lowered its 2026 harvest target by 1,000 metric tons to 6,000 metric tons as weaker than expected biomass production in the first part of the year and soft salmon prices weighed on second quarter results. And Norway's Leroy Seafood Group has also released results this week. The company reported lower farm salmon harvest and weaker downstream margins. Check out the show notes for a link to information on Salmon Evolution and Leroy Seafood Group's financials for the quarter.
Now, on to some tariff news, and we're going to circle back to Highliner. Maybe is the Highliner show today.
We'll take it.
The company announced $7.9 million in tariff recoveries in its second quarter. It has subsequently received a further $27.9 million of the $41.3 million it had applied for under a refund system applied to duties paid under the International Emergency Economic Powers Act, or IEEPA, an action imposed by U.S. President Donald Trump for 10 months before it was ruled illegal by the U.S. Supreme Court in February. And Jewer said that the tariff environment has improved significantly from the higher rates Highliner faced under the administration's earlier IEEPA tariffs. The company now faces tariffs of generally 10% to 12.5% on seafood imported into the U.S., depending on the country of origin, with two countries still at zero.
Other seafood companies have also reported receiving refund checks, including Thai Union and Beaver Street Fisheries. Overall, more than 100 seafood companies have filed lawsuits requesting refunds. Check the UCN Trump Tariffs Fallout live blog for all the latest tariff updates relevant to the seafood industry.
In other news, sound the alarm, Lauren. Endless Shrimp is back at Red Lobster again, baby. I couldn't believe it. I thought it was a mistake when I first saw it.
True. I did too. I thought it was old news.
Right? Yeah. People can't get enough of it. It's true. The infamous Endless Shrimp promo is back on the menu just a few months after leaving it. And it was even extended because remember when we went in April, the woman's like, it's only 6 weeks. And then it just kept going. But the company said that it brought back the promo after a highly requested spring 2026 return that exceeded company expectations.
Give the people what they want, and that's shrimp.
Say shrimp 3 times and I'll appear.
UCN price analyst Gary Morrison, everybody.
Shrimp, shrimp,
shrimp. You ladies ready for round 2 of Endless Shrimp at Red Lobster?
I think I need to fast for a couple of days and then go because they've added a garlic breaded crusted shrimps lineup. And I think I can do some pretty serious damage there. But Red Lobster's CEO, Damola Adamalekin, said that the restaurant chain proved it could bring back the Endless Shrimp promo in a way that not only delights guests, but also works for the restaurant teams and the business. Now, obviously, we don't need to rehash all the bankruptcy details and how the previous Endless Shrimp deal ended up costing the company millions. With that said, though, I do want to note that the chain is still quietly closing locations. So hopefully the return of Endless Shrimp just a few months after it left menus will continue to drive customers through the door. But Gary, do you think there are any factors at play here when taking into account what's going on with the shrimp market?
I do. And who does not like a classic redemption story? The early 2026 promotion exceeded company expectations, so why not bring it back? Well, with the shrimp market actually working in their favor, for the most part, it might not be a bad time to do it. On the wholesale side, shrimp prices have fallen on supply growth pressure. primarily an Ecuador story. While global supply is generally abundant, imports of shrimp to the U.S. in the first half of 2026 from the Latin American country have grown nearly 28% to 320 million pounds compared to 2025. This has led the UCN Farmed White Shrimp Value Added Index, a broad measure of U.S. wholesale prices on value-added shrimp, on a steady decline since the start of November 2025. In that time, the drawdown has been about 7.5%. Other forms like headless shell-on and head-on shell-on are at record lows. Production growth and the need for market share in the U.S. from Ecuadorian producers was the main driver. But when China suspended import declarations from products shipped on or after June 30th, 2026 from 7 Ecuadorian plants, even more of the supply needed to find a home. Farm gate prices fell to record lows, and U.S. importers were able to dollar cost average to their lowest cost in years. Bottom line to our listeners, Red Lobster is running this promotion back against a shrimp market where global supply is plentiful, import costs are at record low, and there is enough gap to not maybe repeat past mistakes.
Well, let's hope so. But I'm glad you actually brought up China's suspension of import declarations from 7 Ecuadorian plants. So at Undercurrent, we're fortunate to work with a team of reporters across the globe. So I asked Maria Fejo, one of UCN's price reporters for Europe and Latin America, if she could give us a little bit of a deeper dive into what's going on in China regarding shrimp from Ecuador. So take a listen.
There's an interesting development happening right now in the Ecuadorian shrimp market, and once again, China is at the center of the story. Ecuadorian farm gate shrimp prices are rising quite quickly after China restored import access for products from 8 Ecuadorian seafood plants. Now, this isn't a full reopening. 6 plants are still facing restrictions, including some major exporters, but the move has already had an impact on the market. Just a few weeks ago, Ecuadorian head-on shell-on shrimp prices were at historic lows. Now they're moving higher, and industry sources said the reopening of the Chinese market is one of the main reasons. Also, processors have more confidence to buy from farmers because they have more access to the Chinese market. And at the same time, feed costs have increased. There are concerns about possible El Niño related rains, and cold storage space in Ecuador is becoming increasingly tight. All of that is putting upward pressure on farm gate prices. The interesting part is that Chinese wholesale prices for Ecuadorian shrimp actually declined this week. So for now, we have Ecuadorian prices moving up while Chinese prices are moving down. That could change, though. Higher raw material costs in Ecuador may eventually lead exporters to raise their offers to Chinese buyers, and that could feed through into wholesale prices. The next big test will be the World Seafood Shanghai at the end of August. Ecuadorian exporters will be there looking for signs of how much demand is returning from Chinese buyers. So the good question here is China simply reopening the door a little, or are we seeing the beginning of a broader recovery in Ecuador-China shrimp trade? For now, the market is clearly reacting, and the next few weeks should tell us just how significant this reopening really is.
Thanks, Maria, and check Undercurrent Daily for updates on the situation. Now, Gary, you're actually heading off to the Netherlands soon to talk shrimp on stage at the Global Shrimp Forum, right?
That's correct. I'm flying out August 30th and landing the 31st in the Netherlands. This will be my second year attending the Global Shrimp Forum for Undercurrent. This year, I'll be moderating a panel discussion on the industry landscape, specifically India and other Asian source nations, with some executives in the industry. And I'll also be moderating a panel that will talk about an equipment supplier's perspective on trade flow reconfigurations. Remember, the equipment suppliers are typically the first in line to understand what's changing in the industry, since capital investment takes a little bit longer to flow through the supply chain.
And in addition to yourself, we have UCN's deputy editor for EU and Asia, Dan Gibson, will also be on the stage.
That's right. He'll be moderating a panel on implementing AI in the world's largest shrimp enterprises. The Global Shrimp Forum takes place September 1st to the 3rd. Reach out if you're going to be in Utrecht. Would love to connect over some shrimp.
I went last year and I'm bummed I'm not going this year. It coincides with the first week of school. It's a little chaotic, but they actually took that. I think they took me into account. I think they heard back from me, and I said I can't go because my daughter is starting school. So next year they're doing it in June, which is really awesome. So hopefully I'll be able to.
Oh, wow. That's a big jump.
Yeah. Now, before we go, and Gary, you can stick around for this too, because I know you love sushi. I got perhaps the most important news of the week. Harryhausen's, the fictional sushi restaurant from Disney's Monsters, Inc., is becoming a reality. Do your guys' kids love that movie? I know it was a staple in my house for a couple of years. I even dressed up as Mike Wazowski's girlfriend, Celia, aka Schmoopsy Poo, one year. So big fans here.
Love it. Yeah, my kids used to love that movie. We got to bring it back.
Same. Lucia absolutely loves it, and Mike Wazowski.
So Disney is bringing Monstropolis to Disney's Hollywood Studios. The new area of the theme park isn't set to open until 2027, but the Mouse House released some details at its D23 fan event this week. And it's a lot of cool rides, of course, but Disney is going all out on the dining experience, which obviously it's Disney, you can expect nothing less. And Michael Hungen, Vice President of Creative at Walt Disney Imagineering, said that the restaurants will have a menu unlike anything else that they offer at Disney World. It'll be a great place, he said, to bring your schmoopsy poo for a romantic meal. So,
But will they have the octopus chef?
yes, they'll have a giant animatronic of the tentacled sushi chef. Yes, that's going to be there.
Oh, for real?
Yeah.
Sounds like this can turn into a work trip.
NFI's next conference in January is in Arizona, but then we're back in Orlando the year after.
Are we?
Possibly. Yep. Well, potentially, right? Because it switches
Yeah, it usually does
every
switch,
other
yeah.
year.
I hope
maybe
so.
We'll head back.
So yeah, NFI's next conference is in Arizona. So that actually brings me to another story. I've got another sushi spot for us to try when we're in Arizona. You see that Maynard James Keenan, he's the frontman of the band Tool. He opened a sushi restaurant in Arizona. Isn't that awesome? And so random.
That is random.
Yeah, I haven't listened to Tool in ages, but I think I'm going to get back on a kick here. So Keenan is set to open up a restaurant in Cottonwood, Arizona next month called Queen Bee Sushi. He landed some top-notch sushi chefs, and apparently he's such a big sushi fan that he even carries around his own chopsticks in his pocket. So,
well, add that to our road trip list. That does it for us this week. Thanks for listening, and we'll see you back here next week.
bye-bye.